Hi guys, welcome back. So the market correction came a bit earlier than everyone expected because it's a lot caused by the black swan, which is the WSB, because it made a lot of institutions cashing out at the same time. It's dragging down a lot of the giant in the index, causing all the index to drop fast. So I think some people are panicking or getting really worried that it's gonna cause a big crash like in March. But I don't think we need to be so pessimistic about this, because sure, this thing came a little bit unexpected, but we have always been expecting a correction anyways. It's because the market has been growing so much in the last 2 months. It really needs a healthy correction in order to keep growing after. So I think we're not gonna have the same kind of crash like back in March, causing 40 to 50% of crash for two reasons. Number one reason is that the Fed has been trying so hard, putting so much effort with the policy to try to prevent any crash that might lead to recession. So ever since March, they have been pumping the market. They have been using a lot of capital, trying so hard to save the economy and to prevent recession. So I don't think at this point a black swan can cause this damage further than the pandemic back in March, when everybody in the whole world did not know what's going on and what's going to happen, because otherwise it would be all for nothing. And number two, because the new government literally just started recently. So if you are the president, would you let this happen right after you take the presidency? I don't think so. So that's why I expect nothing like a crash, but more like a healthy correction, just like back in September and October. So like I said, I have been preparing for this correction for a while. I have been taking profit a bit from the stocks that grew high and then put it in the ones that's still at the bottom. So I've been relocated my portfolio into something more at the bottom. For example, like I said, in these few weeks, and also actually in yesterday's video, I said that I treat Huami like something safer than cash. And today, even though most stocks were down a lot, Huami can still stay up positive. And same thing with Lu, it can still go up 6%. So my number one position is NIO. It's still doing the up and down slow movements, so nothing surprising. And I'm still hoping the golden dip would happen sometime in the future, so I can load up more shares. The two heavy positions that I have that are dropping are Luckin and EH. For Luckin, it's just a pullback. It was a fail to pass the $13 mark and then come back to pull back to gain more momentum. I'm not too worried about the news recently about Luckin's lawsuit. The class action, to me, it's not new information. So I still treat this as a pullback. And $10 is a support. So we have reached the support for now. As I have prepared you guys, Luckin, it's always volatile. When it does the wash sell, the shaking, it's very, very strong. That's why I recommend it to have a small position, so then your emotion is not too affected by the up and down movement. We will expect to see a lot of up and down for Luckin. This is just the way this works. Because I have been following this stock for so long, and I always have observed that this institution controlling everything behind, that's what they do. So I'm not too worried about it right now. Another holding of mine that dropped quite a bit, it's EH. It's also very expected. It has gone up so much, it really needs a correction to wash out some of the weak hands and the ones that chase in after. Because a lot of people chase at 80 to 100, so they need to squeeze out the FOMO first. And back then, when EH was growing parabolic, I did say that it reminds me of NIO back then in July. Let me show you. So this is NIO, and back in July, that's what happened, because it grew from $3 to 16. So it's similar to EH that had a recent 5 times of gain from 3 to 16, 5x, and then it suddenly dropped from the high of 16.4 to the low of 10.4. So if we use 16.44 minus the low of 10.46 and then divided by 16.44, that was a 36.4% of drop. And now we go back to EH. We take the high of 99.98. So how much would it be to drop 36.4% from the high of 99.98? So 99.98 to drop 36.4% would be 63.6. And today the lowest was 64. Which is why in the video I put yesterday, I thought it was still early to buy the dip because I thought it would still have more room to drop. So back then when it was growing uptrend like this, I was preparing you that it would have a correction and there will be a wash sale after, just like what NIO did back then in July. So right now it has reached the first support around 66, and then the next support is 53. At this point, we should be expecting some rebounds. But at the same time, don't be surprised that it would backtest the support. And if the market keep going like this, and if the market stays so unstable, don't be surprised to see it reach the next support, depending on the market. But that would be my price target to add more shares if it does reach that level, because I do think the support of 53 is stronger than 66. But the good thing is that we see a lot of good news happening for EH. For example, we have received the news of this European asset management company investing 40 million in EH. And later on, we might expect to see more orders and contracts. But overall, this is a really, really good company. And last time I said, this is my favorite growth stock in 2021. And I still think so, especially now it has squeezed out some FOMO. And we are still at the very beginning of the stage of EH. So we don't need to worry too much about it right now, even though you're at loss. Try to dollar cost average. As I kept saying, the way to buy EH is to dollar cost average, to have a position and continue to buy the dip. Now this is the chance you can buy the dip, to get some at this level, and if it reach in the 50s, you can get more to continue to average down. Just look at NIO, for example. For NIO, anytime you buy, it's fine. You see, back then in July, even though you bought at the 16, now you look back, it's still cheap. So even though you were at 36% of loss, and it would feel scary and panicking, and so what? If you can average down, buy more at the dip. If you can't, just don't look at it. And next time, the lesson is try to buy in at different time and dollar cost average. This is always my strategy. This is always what I do. Every time I want to invest in a company, I usually would start a position and continue to average down and buying the dip. Just like what I showed you yesterday, how I bought in EH in the first place, my buying strategy. So for now, my strategy to EH is that since I already have 1,000 shares, I would only buy more under two circumstances. Number one is that it has reached my price target of 53, then I will start to add more. Number two is that it continues to have very slow movement until it cools off and people forget about it. That might be the time I start to add more again. So that's my strategy with EH. For now, I will hold on tight. With the share I already have because I believe so much in this company. I'm not worried at all about the wash sale. This is what the institutions do, and it's very expected. And then my next heavy position would be BNGO, and then YSG, and HMI, which are all doing okay today. YSG is consolidating after a big run up. Right now, it has formed a very nice cup and handle pattern. This is quite bullish. But since I already built a quite heavy position back then, so I'm not looking to continue add more right now, but I'm not so worried about YSG in this correction. And then Huami, HMI. For HMI, it has passed a very important resistance back then, and now it's coming back down with the market to backtest the support. And as I said in my video yesterday, it really has very limited room to drop, so I'm not worried about it. I mentioned my buy-in strategy for Huami is that I buy in regularly, sometimes once a week, sometimes once every few days, and also here, and I added more share here as well. So usually I take profit from the stocks I gain a lot, and then I would put it to the stocks at the bottom. So that's why I'm not very worried about Huami right now. And then there's YQ that I have started to build up my position recently. We had bought the dip in the morning. I shared that to the Discord. If you look at the 5 minutes chart. So after we bought the dip, it had the very strong momentum to go up. But then later, it caused by the whole market correction and dragging it back down. But right now, it's still in a bullish pattern. So I will continue watching out for this. I will take advantage of all the dips coming. And then we have also been starting to build up the position on JKS. We started to open the position yesterday, and today we bought more. And then the next target for me to buy more would be touching 60 or below. And then we have also started to build a small position with Baker, ticker symbol BEKE. It's the biggest online real estate agent in China, similar to Zillow and Opendoor. It has a long consolidation for a while now, and it has reached an important support. So that's why we have started to build the position yesterday. But because for this one, I bought options. So I don't want people to follow me from the video because you don't know when I will sell it. And option is very risky. So that's why I didn't share it in the video last night. That's why I didn't share it in the video yesterday. And also what we bought in yesterday, Mesa. I did the analysis on Mesa yesterday in the video. Our buy-in price was around 6.5, and today it was holding quite well in the correction. So as you see, we have been trying to build our portfolio that's more safe. So I think we are okay in terms of facing a market correction. If you have been following my strategy to invest safe and protect the portfolio during the correction, then your portfolio should be somewhat less traumatized by this correction. And I just saw today that ARK has a similar strategy. She has been selling whatever she has, that they have been selling what they have that's grown so much, then put it in the ones that's at the bottom. You see, they also bought Baker today, and we started to buy yesterday. And a quick note on the WSB, the Wall Street bet. I think it's not that simple behind it, because I don't think it's purely retail investors fighting against the institutions. I think the institutions are on both sides, and there is a possibility they are taking both sides of the profit, long and short. So I don't think it's that simple. And if you want to join in it, make sure you control your position to be something that you can afford to lose. So if you lose anything, just consider you went to the casino and you lost in the gamble. Don't go heavy in it. So for me, I would just throw in some pocket change in it to see what happens, just to have some fun and quick entry, quick exit. And also it requires principles, and also it requires strong principles to not be greedy and always follow your stop loss. You need to have a stop loss. Treat it as a casino. And out of the ones they have, first of all, Dogecoin, it's quite difficult to blow it up because the quantity is almost unlimited versus stocks that are limited, especially for those small cap. It's very easy to drive it up. And among their picks, if you really want to join in, I would at least choose the ones that are fundamentally better, which is Nokia and BlackBerry. At least they have good fundamentals, and with time comes, they might grow back later. Anyways, I just don't think it's that simple behind it. So I want to give you just a warm reminder to be more careful with it, okay? And guys, I want to say that we are in a correction now, and we might continue to be in it, but there is nothing to panic about. you can take reference of my strategy. So at least your mind would be more at ease. The market always needs correction. There's nothing to panic about. And the least thing you should do is to panic sell. Like I said, I don't like to make any decisions when I'm not calm. We make plan before, we make the strategy and we stick with it and not change it because you're driven by the emotion caused by the panic at the moment. I am trying my best to help you guys build a portfolio that's more safe and still have potential to grow back up with the time. We just have to be a bit patient so our portfolio would be more protected and more resistant compared to what the market is doing, okay? And if you have enjoyed my content today, make sure you give me a big like and leave me a big comment, okay? Thank you. That's it, guys. Hope you can find my video helpful. Make sure you subscribe to my channel and give me a big like. Thank you.